Netflix stock is down 37% over the last 12 months, and it's given up all of its pandemic gains. In the next 5 minutes, I'm going to tell you if I think the stock is overvalued or undervalued, and if I own it in my own portfolio. Before we start, I need you to like and subscribe to this video. Don't ask any questions, just do it. Like the video, subscribe right now so we can get started. All right, I think you did it. I think you're subscribed. I gave you enough time. On a serious note, if you want more research, I have an email newsletter, austin.substack.com, where you can get more in-depth research, deep dives on stocks, and it just allows me to go a little bit deeper than these silly little 5-minute videos on YouTube, because that's all people will watch on YouTube. All right, let's jump into Netflix and what's going on today. Gonna do a screen share. If you've got any ideas of other stocks you want me to talk about, let me know in the comments. Find me on Twitter at LiebermanAustin and ask me about them stonks. All right, Netflix is down 3% today. Over the last year, down 37%. What is going on? This is just the Google. Let's look at the news. All negative. Stock has now lost all of its gains from the pandemic. It sinks to its lowest point. Let's see. And those are really the only relevant ones, right? So that's the news. It's all negative. Usually when the headlines turn negative on great companies, it can be an opportunity to buy. But let me tell you, if I think the stock is overvalued or undervalued, maybe it's just properly fair valued at the time, and really if I own the stock or plan to be buying it. So we're looking at it. This is actually as of March 11th on Fast Graphs. So it's down a little bit more today. We're looking at it on a price to sales basis over essentially the last, 10, 12 years. It's traded at an average price to sales ratio of about 5.6. And right now it's trading at a blended price to sales ratio of about 5.1. And so it's kind of in line with its normal price to sales ratio. And sales have grown on average 23% per year over that time frame. And so this is what I love about Fast Graphs is we could just take the stock price today, compare it to if it trades at its average or fair value price to sales multiple in 2024, you're looking at an annualized return of 16.3%, which is a pretty decent return there, and especially return potential. So a 52%, 53% total return, 16% annualized, so on average per year through 2024. And that's not bad for a company that's got as proven of a track record, and the trend or the narrative behind the stock is so negative like it is right now. When I look at stocks, I like to look to see, has this stock outperformed just the S&P 500, which we could own, just an index of? And yes, compound annual growth of 36% compared to the S&P 500 growing at about 13%. CAGR, which is still fantastic. In this scenario, you would have turned, I think this started with $10,000. If somebody had owned it since 2009, which is 12 years, they would have returned $432,000. I was just trying to make sure that math is right in my head, but we're just going to go with it. So mega winner. Let's look at the estimates, the analyst estimates, and what they're thinking. And so just going out to if we get a price to sales ratio of 4, based on what the analysts are expecting in terms of revenue growth in 2024, we're looking at a 6% annualized return. 4.7 is about a 10% annualized return. And then that 5.2 price sales ratio is about a 13%. And so just going and looking back at the history, the thing that I also wanted to show about Netflix is that price to sales multiple has jumped up quite a bit since COVID. So one way we can kind of normalize that a little bit, and it might give us a little bit of a different picture, is if we take COVID out of it. then its normalized price to sales ratio over really, those 9 or 10 years is closer to 5, which is a little bit lower than the 5.6. And so if you look back at this forecast, then the scenario that's, back to its normalized history would be right about that 4.7 price of sales, which is about a 10% annualized return. So the big question, obviously I'm not a financial advisor. This is not advice. You need to do your own research. I'm just a random, very handsome gentleman on YouTube. I don't own this stock, and I don't really plan to at this time, because every time we think about a stock, we also have to think about the other stocks that we could own instead. And as you know, if you've watched this channel, I share the stocks that I own, and stocks like Adobe, Amazon, Coinbase, Salesforce are stocks that are much more interesting to me and stocks that I want to own. And you can always see the stocks that I own transparently on commonstock.com/Austin. You can come here. It's free. Connect an account, and you can see research. You can connect your own portfolio and have your trades shared transparently. But this says every time I buy and sell something, shows my portfolio, my performance, which is not good. So don't look at that, and you can see the stocks that I own. Again, like and subscribe. Check me out, austin.substack.com. That's my email newsletter, where I can go deeper and do deeper level of research. I provide a deep dive on a company every month just to help people get smarter about investing. It's changed my life, and I want to help other people change theirs. As always, information only. Do your own research, and have a great day.